Hello, ladies and gentlemen. This is Thomas Fross here with Fross and Fross Wealth Management, where we attempt to be the voice of reason in a world full of the pundits of pessimism and the wall of worry. As always, please make sure you read the disclosures that were attached to this video, or if you happen to be watching on social media, you can simply go to www.frossandfross.com and read any of the disclosures that you might find therein. So the purpose of this video is just to briefly address the potential government shutdown and to explain to you what I think we can expect from this. Here's our analysis. Given the gridlock in Washington, we think that there's a substantial chance of a government shutdown, approximately 75%, that on this coming Saturday, the 30th, that when we roll over to October 1st, that the government has not come up with a budget agreement. We think it's just improbable that agreement can be reached with once again, so much gridlock in Washington right now. And similar to previous shutdowns, we do not anticipate this Washington drama to have a significant impact on the financial markets. Let's just take a brief look back. Since the introduction of the modern budget process in the late 70s, there have been 21 funding gaps. However, only 4 of those have led to genuine shutdowns where government operations were halted for more than a single day. The 4th instance was just a partial shutdown. One of the most notable shutdowns actually occurred in 1995 when a conservative House majority insisted on budget cuts for a funding agreement, resulting in a 21-day government shutdown. And the longest shutdown happened in 2018, going into 2019, when President Trump and congressional Democrats failed to reach a funding agreement. This lasted 35 days, but affected only a small portion of the government. Historically, financial markets have not been significantly affected by these shutdowns. For example, during the 16-day shutdown in October of 2013, which revolved around funding for the Obamacare, the S&P index experienced some volatility, but ultimately rose by 3.1% during those 16 days. So what's the true financial impact of a shutdown? Well, contrary to common belief, taxpayers do not save any money if the government shuts down. Federal workers are still entitled to back pay even when their services are halted. There's a considerable economic cost as some businesses delay hiring and making investment decisions due to difficulties obtaining federal permits and access to federal business loans. So what can we expect? What are some scenarios we can expect during a shutdown? Well, first of all, you're still going to be receiving your Social Security check. Medicare benefits still continue. Medicaid continues. Military, the veterans will still continue to get their pensions. Approximately half, though, of the Pentagon's 800,000 civil employees would be furloughed, but the 2 million U.S. military personnel would remain at their posts. Essential workers like border control agents, air traffic controllers, TSA agents are required to work regardless of the shutdown, and they'll still get their back pay once the government opens back up for business. FEMA could certainly run out of funds for disaster relief and discovery projects. And the U.S. Postal Service, well, you're still going to get your mail. The mail does not require Congress for funding. But one thing I think we can expect is that most likely Moody's, which still has America's debt at the highest rating, they no doubt will lower their credit rating. I mean, if any of us didn't pay our bills, are we going to keep stellar credit? Well, no, and the government shouldn't either. And so this is a wake-up call to those in Washington. Do what's right for this country. But I think most of us will largely be not impacted negatively. Well, that's it for this video. If you have any questions, as always, please feel free to reach out to our office, 352-205-7800. We look forward to seeing all of you soon.